Today's trade of the day is NZDUSD. I am long Kiwi dollar, and as you can see, I'm comfortably in profit on this one. The trade is up already 280 plus pips on this move. My stop loss, I've locked in profits on this one already at 190 plus pips. Stop loss has locked in the bag on this move, and in this video I'm going to give you professional tips of how to catch big moves in the forex market like a smart trader.
Batman, Batman, Batman. Batman, Batman, Batman.
The first key thing when it comes to catching big moves in the forex market is you want to know when and where to catch these moves. And we all know there's a saying that says the trend is your friend until the bend in the end. And basically what that's telling you is that you do not want to catch big moves at the end of the trend. You want to catch these big moves from the start of the trend. Okay, you catch the move at the beginning and not at the end. And this is where supply and demand comes into the picture, because with supply and demand, when you trade like a smart trader and follow the smart money, you have a higher probability on getting in on moves from the beginning and not at the end of the move, just like this classic setup that we see over here. So we have here this horizontal level is our demand level, where obviously we can see price came up from this level. So this was a supply and demand setup. So this demand level, for those of you who have my free video training, I identified this level. This is a demand level identified from the 10th of November 2020. So demand level means that as a smart trader, when we see price come down and test a demand level, we want to start looking for buying opportunities. And the key word there is start, because we know that with high probability, as we are starting to look for buying opportunities, the amateur dumb retail traders are continuing to look for selling opportunities, which means that they are highly probable to be getting in on the move at the end. Okay, and we all know that the trend is not your friend at the end. So if we look at the setup over here, price came to the demand level, bounced up from the demand level, classic supply and demand level move. But if we look at how this setup played out before the move up from the demand level, we can see, okay, and if I zoom in over here, we can see that before price moved up from the demand level, for a significant period of time, we can see that price was moving down. So as an amateur retail trader, when they see this, they see that price is moving down and they want to get in on this move. They want to follow the overall direction of the market. So they are getting into the market with sell trades. And this is exactly what the banks want dumb retail traders to do. They want them to get in on the move at the end, because that's going to help the banks to fulfill the objectives. When the banks want to buy, they get the amateur retail traders to sell. So we can see the market is moving down. Amateur retail traders have been induced, highly probable to be induced to be selling in the market over there. Now, if we go to the 15-minute time frame, which is where this trade was executed, we can see over here, just in more detail. So we had price come down, okay, to the demand level to test the demand level, which we know now that the amateur retail traders were continuing to sell, were getting ready to sell, placing sell orders, and we were getting ready to look for buying opportunities. So price came down to the demand level and actually started to consolidate at this level. Okay, we can start to see that the market is moving in a range. And we know as smart traders, when the market moves in a range, the longer the range, the higher the probability for a breakout from this range, which is exactly what happened. So price started to consolidate at this level. We were getting ready to buy, and eventually when the market broke out from the range, it broke out to the upside, which is in the direction that we anticipated. Because again, we know that amateur retail traders are selling, the banks are getting ready to buy, and all you got to do as a smart trader is follow the smart money, and you'll have a higher probability of being successful. So in this move, we're long from the demand level, nice and easy. Now the second key tool here to catching big moves in the forex market is, once you are in the trade, you want to give the trade enough room to move. Okay, and how you give the trade enough room to move is by making sure that you trail your stop loss like a smart trader and not like a dumb trader. Because what do dumb traders do is they trail their stop losses according to the most recent swings in the market. And we know that the most recent swings in the market are high probability stop hunt areas. I've actually done a video on how to trail your stop loss like a smart trader. Click the link in the description or click the link at the top of the video there that shows you in detail how to trail your stop loss. But the key thing is here is you do not want to trail your stop loss at the most recent swings in the market. You want to trail your stop loss away from the high stop hunt areas to give the trade enough room to move, so that when the trade does pull back, it doesn't pull back and trigger you out of the trade. You're still in the trade, so that after the pullback and it continues to push up in your direction, that you are still in the trade and you are collecting the pips as the market continues to move in your favor. This is very important. So you know when to catch the big move, you know where to catch the big move, and you know that you need to give the trade enough room to move. The last important tip you need to understand when it comes to catching big moves in the forex market is you need to be patient. You need to be patient and you need to let the market do its thing. Now, as you can see with this trade, I've been in this trade for already 1 week, okay, coming up now to 2 weeks. Almost 2 weeks I've been holding this trade, collecting these pips in the market, and this is because I'm simply letting the market do what the market needs to do, by simply letting the market move in my favor, giving it enough room to move, and letting the market take care of the rest. Okay, some of you amateurs, 2 minutes into a trade, you are already losing your minds. You don't know what to do with yourselves. And it's like, you just got to be patient. And it's easier to be patient and it's easier to let the market do what the market needs to do and let the market move if you are trading with moves that are supported by the smart money. Okay, when you are in moves that are supported by the smart money, like this move over here, we knew that this was a move where price was coming to test the demand level. And we know that with high probability, amateurs are in this move to sell. Banks are getting ready to buy, and we are buying with the banks, with the smart money. Then it's easier to be confident, to be patient and let the trade move without trying to interfere with the trade and try to quickly close your profits, because again, to catch big moves you simply need to be patient and let the trade move as far as it can so you can collect as many pips as possible and milk the market for all that it is.
Aweh, Millionaire. If you enjoyed the video, leave a like, comment and subscribe and hit that bell.
Batman, Batman, Batman.